Peter Eliades with you. This is Friday, October 11th. Stock market cycles update for that day. We're going to do something a little different right now because it's the weekend and we all have time, a little more time to take a look at things. For those of you that have been interested in my updates, thanks for watching. I appreciate it. There's a reason for doing these updates. The most important reason is that we want to show off our cycle projection software. We hope some of you become interested in it because we hope to market it. And that's one of the reasons why we're doing free updates. For a long, long time, longer than we like to remember, we charged for these services. We did a daily telephone update. I hate to tell you how long we did a daily telephone update. We were one of the very first newsletter advisors that did a 900 number. We did that back, I can't even give you the date when that began, but we got several thousand phone calls a day, people paying $2 a minute for a stock market cycles update that we did at that time. It was revolutionary at the time in terms of stock market updates, and it was amazing how many people we had accumulated in terms of a following. We'll give you a very quick history on who we are and where we came from. We went to school at Harvard College, graduated, well, I'm not going to give you the year, that'll give my age away. Graduated Harvard College, went to Boston University Law School, graduated Boston University Law School 3 years after graduating Harvard College, and had a wonderful opportunity to go into the legal business. My dad had just passed away a year before I graduated law school with a very successful law practice. But I went into a different field at the time. I went into the musical field, actually. Moved to New York City, started entertaining in nightclubs, piano bars in New York City. Did that for 4 years. And in fact, quick story, a guy came up to me while I was working one of the piano bars and said, "You look very familiar. Didn't I go to law school with you?" And I said, "Yeah, probably." He says, "What the hell are you doing here?" So it was that kind of thing where graduating from a distinguished college and now a distinguished law school, BU one of the top-rated law schools in the country now, and then immediately going into show business, got a few people going in the wrong direction and wondering what in the world was the matter with me. It was after that that I became fascinated with the stock market. I was living in Hollywood at the time, started going to the library every day, reading about the stock market. Happened to go to a friend's house at the beach in Southern California, saw a book called The Profit Magic of Stock Transaction Timing by J.M. Hurst. It was about cycles in the market. Most of the people that are in cycles now doing that analysis in the market started from that J.M. Hurst book so many decades ago. I became fascinated with cycles in the market. I became passionate about them. I went crazy. I stayed up all night looking at charts, looking at cycles, counting cycles, doing all the things that one does when he becomes crazy about something that you become really attached to, addicted to it almost. And so that was the beginning of my career in the stock market. I started writing a newsletter in 1975, and the reason I started in July of 75 was in the fall of 1974 on KWHY television in Los Angeles, where I did market commentary. I kept pointing to a 212-week cycle in the stock market, telling people that a very important bottom in the market was due the week of December 9th to 13th, 1974. Go back and look at your charts. Go and see what happened the week of December 9th to 13th of 74. We told them about this not only weeks, but months ahead of time. Most of the autumn of 1974, we told people about this cycle. Well, lo and behold, on exactly December 9th, 1974, the market reached a very important bottom, one of the most important bottoms of the last 100 years. And you could claim we've been in a real long-term bull market since then. Gained a little notoriety at the time because of that call. Started writing a stock market letter in 1974. By the way, the next resolution of that 4-year cycle, it was actually a 212-week cycle, not quite 4 years exactly, was in January 24th of 1983. And we were on Financial News Network at that time and kept pointing to Jan 24, 1983, saying it's another resolution of the 212-week cycle. Lo and behold, January 24th, it wasn't an exact bottom. We had bottomed in August of 82, but in January of 83, on the button, on the day, Jan 24th, the market took off and never looked back. So that was the beginning of our journey into cycle analysis in the stock market. It's gone on for a long time now, obviously. If you go back to our newsletter in 1975, and you have to go forward, well, you count the number of years, that takes us into today. We no longer write the newsletter. We stopped in the last 5, 6, 7 years. Because of what's happening in the market analysis field, and we started writing around a monthly report on stock market cycles and our analysis of the market. What we're most excited about now, and the reason we're doing these free updates on YouTube, is because of the software that we have. If you've been watching it for weeks and have not been impressed with what the software has done, then I have to think that you haven't been involved with the markets for too long. If you have been involved with the markets and have been watching on a nightly basis what we've been talking about, the software is simply amazing. Not just on a short-term basis, on an intermediate and a long-term basis too. So that's my background very quickly. I've taken much too much time to give it to you. This is obviously going to be a long tape. But let me show you one more thing here quickly. You're looking at a blank screen right now. And on that blank screen, we're going to show you a bunch of cycles. We're going to go through them very quickly now. These are actually sine waves. And these sine waves represent cycles in the market. This straight line that you see, a lot of you have watched this on our animated chart, represents fundamentals in the market. Fundamentals move in a smooth fashion, usually like a straight line, up, sideways, down. They change, obviously, from time to time, but in terms of market timing, they're completely useless. Fundamentals will not help you with market timing. The cycles move around the fundamental line, and when you put all of them together, the line going upward or downwards, in this case upward, and the cycles, and again, this is a hypothetical situation. It's not to intimate that there are just 4 cycles that determine what happens in the market. Then you see something like this. This is the result of putting all 4 cycles and one line together. Sure looks like a stock chart to me. Here's a support line right here. The market breaks that support line, comes down, makes a bottom, starts up, makes a little triangle, little tops here, bottoms here, breaks above the triangle, has a big move up. That's the way the stock market works, folks. And it's all a combination of cycles. In this case, idealized sine waves. I'm not claiming that they're perfect cycles, but they're cycles in the market that determine what happens in the market. And that's our theory of how the market works. Those of you that are wondering what the blue little and the red little lines are, the offset lines, let's assume we have a 20-week cycle. The way to measure the tops and bottoms of that cycle, if it's 20 weeks long, is to move the cycle over a half span. If it's 20 weeks, you move it over 10 weeks, and that's where you get with the dotted line here, the little squares. The squares come through the 20-week cycle exactly at the halfway point, so you can project upward movement, and when it breaks below the offset, downward movement on the cycles. This is still idealized, but it's more like a stock chart to show you. Here's the halfway point. That's the offset line. So that's basically what we're looking at when we look at cycles. That much having been said, let's quickly go into our end of week analysis. This has been an amazing week. We gave you numbers over the past couple of days that the market had to stay above. And we gave you three indexes. We gave you the New York Composite, the S&P 500, and the Dow Jones Industrials. We gave you exact numbers that the market had to get above to avoid giving downside projections. This chart is from yesterday. As we looked at it yesterday on the S&P, before today's market action, you would have gotten a projection to the downside of 28.29 plus or minus 10% of the complete move from this high. And we told you that you needed to get up today specifically to 29.8505 or higher intraday to avoid this downside projection. Well, guess what, folks? The intraday high was 29.9328, a spectacular day to the upside. The S&P cash closed up 32 points, although it was up, I believe, around 50 points earlier in the day, and made this high and turned this line up and avoided giving a downside projection. So now you still have this upside projection, 30.5226 to 31.0340. That one is still in effect. Let's take a quick look at the Dow Jones Industrial Average. INDU. See if we don't see almost exactly the same thing happened here. We gave you this number, 26,700, required to stay above the offset. Do you think the market knew that? I think it did. And that's exactly what we saw today. This rally up well above the 26,700 level, with the Dow Jones Industrial Average being up 320 points for the day. It was required almost to do that in order to salvage this upside projection. So it's like the market knows where these lines are. It knows if it's planning to go higher, it had better get its act together and not give a downside projection here. Let's take a look at the New York Composite Index, $NYA.X. This was, I thought, the most difficult of all, because the New York Composite Index yesterday, mind you, this is the bar for the week right here, and yesterday this median point was actually coming down, and a downside projection had actually been preliminarily generated because it was not the end of the week. We were saying if the week had ended yesterday, we would have had a downside projection. Well, 12,975 was required on the New York Composite Index. The high for the day, 13,025 and a quarter. So all three of the indexes that we follow did what they had to do in order to avoid giving a downside projection and in order to maintain the upside projections, the nominal 10-week upside projections. Okay, so that's where we stand at the end of this week. These projections are still outstanding. Now, mind you, next week, we've got to see a pretty good continuing rally here, because the median next week has to be above this level right here. That's 13,026. Well, we closed right here today, so that's not any kind of remarkable move to be expected next week. But next week, in order to maintain this upside projection, that's the median price that you have to attain next week. It's a little higher than the close today, but nowhere near the climb that was required in order to see what we saw today. In other words, avoiding giving a downside projection and invalidating the upside projection. The next thing we'd like to do is take a look at a slightly shorter term picture, and that's looking at the 65-minute cash projections. Okay, we're going to quickly do this. These are what we call our hourly charts. They're 65 minutes long, and this is the equivalent of a 12.1 to 13.8 daily offset, 2.5 weeks, which gives nominal 5-week projections. Look where we ended the week. We actually went above the initial offset line, the red line, and in so doing, we gave a preliminary upside projection. This is on the S&P cash to 30.6918. You could put a plus or minus 10% on that. We're not going to do that now because the projection has not been confirmed. In order to be confirmed, we've got to get above the blue line coming into Monday of next week. If we turn down quickly on Monday of next week, then this projection will not have been confirmed. But with any kind of strength on Monday, you should see this projection confirmed and perhaps the upside part of it go to an even higher level. Okay. Let's take a look at the same offset with the Dow Jones Industrial Average. It's interesting how they all are going to look about the same. Remember, this is the equivalent of a 2.5-week offset on the hourly chart. So we played with this number. In fact, one of these bars today got above the initial offset line. This is on the Dow, and gave a preliminary upside to 27,769 rounded off. Couldn't get above the second offset line. That might be a warning sign to watch out for Monday if things start coming down again from there. On the other hand, if we get any kind of upside move on Monday, this upside projection will be confirmed, and perhaps the upper side of it, depending on where we cross above the second line, will be slightly higher. So that's the S&P and the Dow. Let's take a quick look at the New York, $NYA.X. This is the one that had to struggle because it had a lot further to go today. But it's basically looking about the same way in terms of its offset line, the equivalent of a 2.5-week offset. Look what happened here. Again, we got, at least temporarily today, a projection up to 13,472. As it turned out, later on in the day, we went back below both the offset lines. So this one's calling a little bit more into question whether the projection will be given early next week. But any kind of move, you don't require that big a move on Monday, Tuesday of next week. Just need to get above these two offset lines, which just slightly higher than today's high, and we will have confirmed projections to the upside, most of them confirming where the nominal 10-week projection already exists. That's where we stand. It's been a long update. Hope we didn't bore you. Please let people know about these updates. If they're interested in the stock market at all, they have to be interested in this. It's fascinating. How it works is fascinating. Most of you have gotten a chance to see how it works over the past several weeks. You have to be impressed with how these projections call market action ahead of time. If you haven't subscribed yet, bottom right of your screen, click on the little red banner. Once you click on that, click on the little bell that comes up. That'll give you notifications every time we do an update. Have yourselves a great weekend. We plan to talk to you on Monday. Thanks for watching.